All right, 41% of government has experiences fraud. That's a lot. Has anybody experienced fraud in their community or municipality? Anything? Loss, accidental theft, accidental misappropriation, protection, or otherwise? Yes?
So we had years ago before I got started in the jail stores.
Anybody else? The other thing I noticed here is the budget amendment. To me, that's an important part. How many people here amend their budgets? How many times a year do you amend the budget? All the time? Once a year? Do you consider projects or unexpended funds from the prior year that are rolled forward into the future? How many people actually roll over projects or major capital expenditures that have not completed in the current fiscal year and in that budget down and increase the future budget for that money dollar for dollar? Like a capital project or something that hasn't been completed, and we start projects in May or June, then they won't finish. They end up being completed in September of next year. We have to amend the budget. So what I'd like to do is keep. Yes, ma'am.
So you're supposed to have a project capital or project based or project linked.
That's the idea, yes. Should happen, yes. But you have a capital improvements program.
Right. Which I guess normally is 5 years.
Yes.
So would you just keep adding on to it for the new slots? Like my new slots for my house. So I get a new slot, referendum and it approved. So would I do a separate for that slot from my prior slot?
What we do is we look at the SPOS projects that are submitted and verify the voters, and we then create a capital project for that SPOS, for those projects themselves. Now we have 2015 SPOS that has been approved. We're going to create a whole new project budget for those specific SPOS projects. So separate fund, because it's going to be 2015, and then we have 2006 SPOS, 2008 SPOS that we had that's now rolling out. So we're winding that in. Separate fund. How many know the statute that requires us to do a budget? Oh, I gave it to you, didn't I? Okay. So, did you know that governmental funds are the only ones that are required to have a budget? And what's the definition of a governmental fund? Any view? Why do we have an enterprise unit? Is that a governmental fund? That's an authority. Is it a funding unit? It depends. It's always going to depend, right, Kenny? Okay. Governmental funds are your general fund, SPOS funds, community development block grants, your neighborhood stabilization programs, your tax incentive programs, tax allocation districts. Those are your special revenue funds. Those are classified as governmental. The business units, such as the water funds, the electric utility funds, the solid waste funds, those qualify as business or proprietary, and they're not necessarily required to have a budget. But why would you not have a budget for those units that have one of the biggest cash flow coming into the city? Budgets are really important.
Okay, so.
Oh, I'm supposed to talk into the mic.
Well, no, just be close enough to it. So
Oh, I apologize. Okay. Let's go down here. Let's see what we got. So each unit, we talked about that. Okay, revenue. How do you define revenue? We talked about it a little bit earlier. Basically anything that comes in, grants, fees for service, charges for services, tax licenses, and whatever else capacity. What about transfers from utilities? What about transfers from other sources? Charities, donations, all that's considered income. and you have expenditures. Those expenditures, for budget purposes, are considered the appropriations of that revenue. Now, earlier, our fund presenters mentioned about fund balance being used to perhaps balance the budget. But is it really balanced when you take the money out of a number that you really don't necessarily tie back to cash to make up the difference between revenues and expenditures that exceed those revenues in order to balance the budget? How can we actually do that when that cash number up top has maybe $100,000, but you need $200,000 to make up the budget? Where's that other 100 coming from? So, budgeting for cash for everything in and out is very, very important. Which is why when we create our budget, we scrape everything together. So we identify all the revenue. Oh, let's go back one question here. How and when do we determine what is actually revenue? What's the definition? Two things, components. Has to be measurable, has to be attainable. So if it's measurable and attainable and we can realistically expect to receive that cash, we'll program it in. What is a non-cash item? Depreciation, bad debt, those are non-cash items, so we disregard those. Before I go any further, let's move on here a little bit. I may have jumped a little bit ahead. Permanent fund, let's backtrack real quick. Permanent funds and trust funds, those are also exempt from.
But we recommend that they have them.
It's recommended, yes, not required. Now I get into some good stuff here. Financial planning. What's the definition of financial planning? Come on, this is participation. I'm not going to give you
Planning for your future.
Planning for the future, yes. What else?
Roadmap for you in the direction that you want your city financially
A roadmap, or say that again?
for the direction that you wish your city to facilitate progress.
Vision, roadmap, future, progress. Where do you want to take your city? Where do you want to take your municipality? What programs does your elected officials have in front of you that you need to put forward in this budget? So it's forward thinking. Internal controls, we talked a lot about that earlier, but what I'd like to ask now is how many people actually review that budget monthly, quarterly, annually, weekly, budget to action? Every month. What happens when something comes out of line? What happens then? The part of the meeting, okay. So why would something be out of whack, whether it's revenue or expense? Bad forecast.
Unexpected
Unexpected expenditures. Revenue could be over, could be under. What's that? Local option sales tax was under projection. So were we too aggressive in the forecast? Or was it an economic issue? Okay, so how did you amend the budget? Okay, so what expenditures did you cut when you found you lost that you come in on target? The overtime was already spent. So no more, okay. So we understand the importance of looking at those revenues, looking at those expenditures. What happens if you had a line item that was budgeted and that line or category of expense now suddenly went over? What do? We ask why? I know the city manager always asks the department heads, why? Why are you over budget? Why are you here 30% of the year, then you're 40% over budget? What happened? Was it one-time expense that was budgeted for the whole year? And what we do is create the budget is set for the entire year, so it includes all the expenditures that are going to be incurred during that time. Not is it one, it's not 1/12. So if we have a contract that we pay upfront for the year, we pay it in September, it looks like we're 60% over budget, because we're already a third of the way into the year. At the end of the year, that variance goes down, now it's normal. It's a serious control document that is very important for the success of the organization. It's also a way to manage cash flow. And we'll talk a little bit about the trends in a little bit. What about operational management? We touched on that somewhat. Efficiencies, effectiveness. Maybe there are programs that need to be addressed from a board perspective, from a citizen perspective. And communication tool? Yes. It is definitely a communication tool. Who else would use it? How many people go out, how many entities go out for bond ratings? If you maintain a quality budget, maintain a good audit program, that will then go a long way to help bring about quality credit ratings for your municipality to go out and get additional debt if you need it. So, how many people have a nice calendar that they run by? Does it work?
A calendar?
Yes.
Oh, yeah.
The budget calendar works.
Oh, no. Yeah.
We typically start around November building the templates, building the requests. December, capital items come in. We start reviewing that, and then in January, after we compile the December numbers, we then issue those reports out to the department heads from there. The department heads have a 6-month trend to look at for their current history, and then they'll be able to get an idea as to what else they need for the next year. And then they'll submit those to us by mid-February, and then March 1st or so, we start meeting with the city manager. Yes, sir.
I don't understand how that can possibly work if you don't have another item in front of it where your council sets the goals for the year. We're not doing anything but shoveling paper around unless we know what the council's goals are.
That's a good point.
Most of our city councils right now take a budget document and say, well, we need to cut $50 out of this and $600 out of that, and they do it line item. And they never look at what they're buying. And that is a totally flawed budgeting process. Very few cities ever try to say, these are the things that we're providing for this budget. Would you like more of this or less of that, or what combination? And if you don't do that, you're going to have to redo this at the end of the process.
That's a good point. I didn't put up there that the goal session for, when do we have the goal session for staff? January, right? Late January, early February, and then commissioners early February, correct? And then as long as those items line up with our budget, then we do whatever we need to make
Your fiscal year, July 3.
Yes, sir. The fiscal year is July through June 30th. How many people have October through? Yeah, October through September. Anybody? Okay. How about January through December? We're going to have some challenges with, popcorn insurance. How many people have issues or challenges with health insurance budgeting for that? Especially if you have a fiscal year and the plan runs calendar. Big challenge here. So moving on, what level does the board approve your budget? At what level? The fund level? Or down to the nitty-gritty line item? What's that?
Line item.
Line item. And how do you amend the budget?
Line item.
Do you do a line item transfer internally, or does that go before the board? What's that?
Depends on size.
Depends on the size.
As if the whole account's gonna be over, just one line's gonna be over.
Well, if it's approved at the line item level, technically the board has to approve that change every time. Our board approves at the fund and department and function.
Now, Marcus, if you have it, if you designate, the level at department level once, do you have to do it every year? Like that at budget time, or can just one time cover that level?
I'm not sure I understand the question.
If you've got an ordinance that says your legal level of control is at the department level,
Right.
is that good for here on out?
If that's your ordinance, then that's what has to be.
So if you wouldn't have to every year restate that,
It would be included in your budget presentation.
it would be, okay,
Right, because that's how the board will review and approve the budget document.
okay.
If it goes down to the actual item that's purchased, then every time you change that item at that line item, at that low level, then that has to go to the board. If, however, like for example, accounting needs supplies, operating supplies for some reason, but they have money in, what did I say, in paper, but they need to move it to tools, okay? Let's say we had two categories, two line items, paper and tools. We could transfer, because they're both in the supplies source code 53, supplies category, we can do a line item transfer to take money from tools and move it to paper, if we needed to do that. If, however, we had money in tools, and then we needed to go to contract services for dues and subscriptions renewals, because we're over budgeted memberships, that requires a budget amendment because it's crossing over categories. So we would have to actually do a formal budget amendment, present that before the board has to approve it, and then we can give the money. If you cross funds, you have to do an amendment. Cross departments, it has to be amended. And we perform our amendments each time an item comes through. Let me go back. So when the directors have to buy something, or a part broke, a generator broke, and they have $40,000 in tools and equipment that they're not going to buy, but this generator is $35,000, they're going to request a capital budget amendment, taking 35 out of tools and small equipment, and moving that to capital outlay in order to purchase that generator. The other point that I want to bring out as well, take a look at your procurement ordinance. Some ordinances require that the funds be appropriated prior to the actual purchase order or encumbrance or expenditure of that fund, because then you put the cart before the horse, and that becomes a compliance issue if there's ever an audit at that limit. So internal controls, you have to have the money appropriated before you actually go live. A lot of times it's like, oh no, I gotta have it now. Right? Do we all get that? People gonna pass out? So that money needs to be appropriated from a control perspective before you actually incur the expense, or at least the money for it. Okay, now we're gonna move into how much time I got? Plenty of time. One of the things that our board, one item that the board really appreciates from the finance department is what's called a quarterly status report. What we do there is basically take our trending and produce a document that projects the general fund revenue, where we're going to be at June 30th. How do we do that? Well, it goes back to the comments earlier about trending analysis. Looking at a 12-month rolling, one takeaway point here is rolling 12 months, rolling 12-month totals. That number will have every season, every cycle at any point in time, whether it's June 30, February 28, April 30. If you have a 12-month period, you'll always see a full 12-month load in your report. The nice thing about that is you can then take that 12-month number for each month and plot that 12-month load each column. Then you have a true trend of where your revenues are going. Property taxes is a good one to look at. It's consistent. But if we were to look at property tax in the month that it's collected, a month before and the month after, what happens the month before? What do we show? 0. Now the month it comes in, boom, we're cash rich. Next month, that revenue's down. If we just look at those couple months, can we truly make an assessment of where we're going to be next year? There's monies that come in throughout the year. Using a 12-month image, at each month, regardless of where you are, you'll always see 12 months of revenue. You can see that trend go up or down. And that's how we forecast. And that's the type of information that we provide to the board in our quarterly status. Let me pull that up real quick so you can see what I'm talking about. So this document has our budget, and these are the major categories for the DCA, and then we break it out by classification between operating and non-operating. And then we have a 12-month rolling number as of March 30th, March 31st, and then we have a projection column that shows where we think we're going to end up for the year. And in the end, we have a number, a difference between what our projection is versus budget. And that shows right now about 100,000. This document here shows a little short on the transfers, and that's because the electrical revenues are coming down a little bit, and that then affects the amount of transfers to the general fund, because it's based on operating revenue. License and permits, there's an $84,000 variance there, and then it looks like on taxes as a whole, looks like at the moment, at that time, $280,000 to the good. This is the type of information that I think your board and your constituents would really like to see. So if you can figure out a way to develop that type of reporting, I can show you. I'm going to do my best to show you how we got there. But this document they really love. And then I also include in here the federal page book from Atlanta, the economic update. I put in the GMA's Treasury Management, GFOA's Treasury Management information. That's in there. Unemployment information is included. So for each quarter, the board receives those updates. Now I also take this one step further and break down the taxes by line item. So here you can see the taxes breakdown by line item. We have property tax, public utility, the motor vehicle, the title ad valorem. And there you can see too, we're a little short on the title ad valorem. Why is that? Can anybody tell me what's going on with title ad valorem? Anybody? I tell you, the state's got the information. We just need to be able to get our hands on it. That's not, yeah, the TABT was lost. But it converted. So how do we make it?
Equipment tax. Railroad equipment tax?
That's
a question, what kind of question about?
That's railroad, yeah. Railroad.
We need to.
You have to go talk to your tax commissioner.
The railroad tax is administered by the Department of Revenue, if it's that railroad tax you're talking about.
Correct.
not property tax, but property tax. That
It's not property tax.
No, if it's, you have to go see I'm sorry, you said the Department of Revenue, correct?
Department of Revenue, and what they do is they take all the lines, all the miles of lines, the railroad lines, and they do some kind of calculation about how much is in your city, and that's how they distribute those checks. And there's always an appeal on all that, so that's why you never get them.
But see, here again, our railroad tax changes from year to year, but the lines have not changed.
I mean,
So why is the number go up and go down?
it's the appeal of the assessment, the appeal of the assessed value.
But a rail costs so much to lay per track, and that's a fixed cost, so why would that go over him?
Call it property revenue.
Railroad, they pay real estate tax, yes, but not equipment tax.
That's intangibles. That's, excuse me, not.
It's on the car. Okay, I stand corrected, it's on the railroad cars.
Yeah, that's equipment.
Okay, so there you go. So that inventory, depending on what's parked over here, yes, or is it based on what's registered?
They send in a form to the state, I know railroad do. Yeah.
Trust me, the check's in the mail, right?
Yeah.
If we could get the department revenue to answer the phone.
All right. Any questions so far about how we get this document? Or you guys want to go into more detail? Are you sure you want to go into more detail?
Do you go into detail with your council every month with the budget?
Every month, we present budget to actual documents. Yes, we review by department at the department level, and then we provide a fund roll-up by fund, and then also provide a consolidation for the board. We also provide them a cash report, and then we also provide them an Excel file that shows the last 3 years' collections by month for local option sales tax and special purpose local option sales tax. This month was the first month we had an issue with the collection because this is the new loss that was in effect. We had $600,000 that was supposedly reported by the Department of Revenue. It did not show up in our account. And we're like, okay, why? Well, there's other things involved because there's county that's involved, there's IGAs that are involved. So our portion of it is about 120, and we've been assured that that money is going to be deposited today. I have to go back and find out. All right. I think I've strayed a bit. Let's look at the Excel documents, shall we? This is not my file. This is my file. Disregard that column that says budget with all the values things. We transferred the files from several computers, and as a result, there's the error there. But that doesn't change the formulas. So this document, similar to what was presented earlier, captures every month that we have. And I go back 7 years, 8 years since I've been here, 9 years. And this takes each account number and plots every month in one file. So I have the trial balance that's populated here, where I take the information from our trial balance and it's just, I export it to a PDF and then convert it to Excel and drop it in. And then I clean it up a little to get all the cells in line, the rows in line, and it basically creates the document. Now, how do I get all this other stuff in here? Okay, So there's the account number. I have a formula that goes in and breaks out the source, so I don't have to sit there and parse it out. It parses it out automatically. I have another item that strips out first the fund segment, and then concatenates the number into a single digit. This information is populated from the month before, and then this number here is a function of the source, which is the 31, plus the 1770. That's the object code. And it combines those two and it creates a unique number. We may have several account numbers or function codes, which is the department code, attached to a particular account. So then down below, I have another table that then summarizes the source and object into one total. I can confirm that total at the bottom with all the data up here on the top half of the sheet. And that's what's used then to populate the projection on the revenue by fund. So I take the individual month and I bring that forward into that other tab that then aggregates all of that information. Out to the right of that tab, go back here, so. So out to the right here in the green, these are formulas that go back and say, all right, take everything from March 2017 back through April 1st, 2016, and add all that up. That gives me $3,794,000 for property tax. And I do that for every month. That's the information that populates into the status report of where we are at that point in time, or where we might be in the future. So if this were 2016, if I go back to March of 2016, right over here. Oops, too far. Okay, that shows me $3,740,000. That's the number that's on the quarterly status report as the rolling 12-month number. That gets presented to the board. Then out to the right, where am I going? Look at June. I have my June's number already populated. So based on past performance, actual plus 3 more months of estimates, I end up at $3,729,000. Going out to the right, if I go to June 2017, based on my formulas for averages and so I already have 2017 set. And that's what we use to create the 2017 budget. How do I come up with these averages? Generally speaking, no pun intended, as a general fund, is I use the month that the collection is for, and then I use that same month, and I go back 1 year to that same month, and I go back prior year to that month. So then I have 3 months that I use as an average for 3 years. And that has been pretty good for us to come up with estimates. Now, I go one step further to slightly adjust those formulas depending on what is being estimated and economics. Fuel prices go up, I'm going to make adjustments in certain areas. If property values go up, I'll increase the collection for the next year after a certain time, after the property tax millage rate drops or hits. The motor vehicle tax is not going to change much. That's based on the statute, and the law on that one is governed under, the statute is 45, section 48, chapter 48, section 5C-1. And that basically lists all the changes that are coming up through 2024. So That information's in there. How do we estimate it? It's a challenge. What we have done is taken the motor vehicle tax and shaped it down, and then trimmed out the TABT, basically flatlined that based on average. I can show you the formula for what we're using. So if I go back, this is the 12-month section. If I go back, all right, there's two columns here that I want you to look at. The one in color, like orange, pink, whatever. Then I have the yellow columns. This column is based on the trial balance, the numbers that I pulled out of the system for that month. When we close the system, I pull those numbers out and I populate them in here by month, so I have a physical record of that. And then this formula here feeds from, this is, let's just look up the period 9. So that's pulling from period 9, that was March. So that's where that's coming from. These are estimates of what we think might happen. So out to the right here, I always take a look, when I do these projections quarterly, I always look at what's been collected for the 9 months, or 3 months, or 6 months, whatever it is, and compare that to where we put the budget and where we think we're trending towards. Sometimes the property tax number drops in a different month. I have to go back and check that because I don't want to overload the budget or the projection. If it's dropped in a month earlier, maybe it's going to pull my number down. I have to put some reasonable assumptions back into place on that estimate. So this is basically going back, and you can see here the formula is going back 3 years, 1, 2, and 3, and then it's giving me an average of that. And I have other formulas in there that sort of make it 0 or brings it up or brings it down. In this case, I pulled out $40,000 because we had a higher collection in March than what we originally anticipated. And I didn't want to project that forward. So I pulled out an additional $40,000. See you in just a couple more minutes. All right, I've been given the cue card here. You're about to pull out the hook. So TABT, the right one. This is touch screen. Oops. Don't touch. Motor vehicle tax. I'm basically going back those 3 years and pulling in only 90% of that. So I'm dropping it by 10%. So I'm going back by 3 years, getting an average, and then dropping that down. I'm only capturing 90% of it. So this is what we average. If you were to up this by another 10%, that would have been our collection in that month in prior years. The motor vehicle tax, on the other hand, that was TABT. On the motor vehicle tax, so it's coming in less. We brought that down to 75% of prior year's collections. So we go back 3 years for that month. So that would have been April 2015, April 2014, and April 2013. And I take that, come up with an average, and I only take 75% of that. That's what I'm thinking is going to be the new number for that time period. It's not very scientific, but it is based on what we anticipate the trend line to be. And that's how we budget all our revenues. Some of them are going to be quarterly, which is going to be the franchise fees, the cable vision, the natural gas. You have to go back and look at which quarter those items post, which month, and try to hit that in that same month every time. Then you can get a better average. Because if it's in one time it's in April, one time it's in March, one time it may be made. You have to put some sort of reasonable assessment on that, or judgment. I'm sorry, say again? Enterprise, the business units, we do not, this is purely for the general fund. The water and wastewater, stormwater, solid waste, they have their own reporting, but they don't go to this particular level. It would be applicable, but there you have a couple of moving parts. In water, for example, you have rates, the different size meters, the different size pipes, the different size, whether it's commercial, residential, industrial. So there are going to be issues with that. We're trying to forecast where you're going to be, unless you have everything clearly segregated. Another area is the electric utility. You have your industrial parks, you have your residential, commercial, you have your institutional. So, and then it's seasonal too. Same thing with water, it could be seasonal. Now we're going to head into the drought. People are going to want to water their lawns. Guess what? This is a double-edged sword, because now they're going to force drought restrictions to be in place come July. So that cuts off the water spigot, unintended. Now we have to go back and look at the revenue stream and identify what kind of capital projects are we going to push back on and hold back, because the cash is not going to come in. The same thing is with electric. Electric utility is going to go up, but there's a 30-day, 60-day window from the time we actually build, and the bills go out, it gets incurred, the bills go out, so there's 30-day lag there, then it's another 30 days by the time the customer comes in with the payment, and then at that point, we could be stuck with maybe a partial payment. Now we have to go back and evaluate, okay, where's the cash really going to go, and are we actually going to collect it? Now, collection rate is pretty good, it's about 98%, 95%, which is substantial on the utility side.